Morning, welcome to One Financial Markets Morning Commentary. I'm Andy Johnston. So yesterday, once again, very boring markets. Gold had a small appreciation to the upside, and Dow sold off about 224 ticks to the downside, all based on the fear trade. Trump unknown what the guy's going to do. The VIX rocketed to 16 for trading around the 11 level. So basically that's the fear index of VIX. It's options on the S&P. So basically I think people are, it's supposed to be an indicator of positions in the market and the options positions in the market relevant to the S&P. And basically the VIX is saying that people are a bit scared at the moment. Called the fear index for that, and it rocketed yesterday. So we had a small down move, a small gold move, euro up about 20-30 pips, nothing of great consideration. So we're now kind of looking to today's data, which is the CPI. Yesterday we had PPI. PPI missed on most fronts. It was negative. I'm just going to give you the exact data now. A survey 0.1, it was down negative 0.1. PPI ex food 0.2, down 0.1. So everything missed on the PPI front. Right, so these are my two trades of today, and they are all based around the half-on figure of CPI. So do not trade, my honest opinion, do not trade during the day, or if you're going to trade, make it very short term during the day, during the UK session, because the biggest trade of the day is going to be around the CPI this afternoon. Now, the reason why I'm saying this is because of the data released yesterday, the PPI yesterday. I'm going to get my PPIs and my CPIs all mixed up now, but PPI yesterday was negative. That is deflationary. Deflationary means interest rates will have to be kept on hold. And if interest rates are kept on hold, people will have cash at the bank, get no yield. So if you have no cash at the bank, where are you going to put it? Into equities. So equities, in theory today, if the CPI is a negative, which is deflationary, should bounce. So that's one I'm going to look at. However, that is not my two trades of the day. My two trades of the day are dollar yen, which has been trading the perfect range for the second and third quarter of this year, but we are at an inflection point in major support at 108.30. If we break 108.30 today, I have a short-term target of 107 with potential for 102, 10 or 103 on the downside where the support is here. This is purely on the dollar getting a massive slap if the CPI comes out negative today. This will be purely deflationary. Rates will have to be on hold for not 12 to 18 months at least. It does play into Trump's plan, but then also we've got the risk fear as well of people loading up into the yen prior to the weekend. So we are at a major point here in the dollar yen. Break of 108.30, short-term target of 107 with a long-term target of between 103 and 104. But I think today's CPI, in conjunction with yesterday's PPI, will have very interesting tones to it. My other trade of the day, and I've been going on about it since we started these videos, is gold, precious metals. Once again, we've had this lovely sideways consolidation, support and resistance has been beautiful. But I was just doing some nice little background analytics on this, and for the last 5 years, if you look at 2016 to 2012, the average dollar move in August is around about $83. This August we have only moved $37. I reckon there's another $40 to $50 worth of upside movement in gold, at least, at the very least half that. There's some upside movement. So as I see here, third time we are hitting this top resistance point here. I reckon this can kick on now, based on the lower dollar, because I reckon CPI is going to miss bad. So I've got my first resistance at 13.17, and then 13.47 is a potential after that. This once again ties in well with the Trump theme at the moment. China's not really happy about what he's been saying to North Korea, and he has just been mixing it with the wrong people, and so I want to be long gold at the moment. Well, I did talk about a couple of videos ago about seasonality as well, while portfolio managers and the asset managers will add to their positions in August, because September, for the last 45 years, has been always been gone up. It's always been favourable for the market. So based on that, they're probably adding to the positions now. The Trump fear factor, the dollar sell-off, and the deflationary environment are all going to tie into gold. And I really see gold to the upside of 13.17. So those are my trades of today. Dollar yen to the downside, gold to the upside. If we do see CPI off and very aggressively off, I mean, we're looking CPI month to month 0.2. If that comes in at minus 0.1, down might tick off slightly, but then that is going to play into the hands of the equity traders, and it should bounce. But my trades of the day are gold and dollar yen. You might notice I do have a golfing glove on. The reason why that is because I've been so bored of the markets all this week. I'm waiting for the 130 figure, and as soon as that's done, I'm going to hit the golf course, because I had it up to here with the markets today and this week. So tedious, so boring. So if the CPI doesn't hit off, I'm going to go and hit a white ball around the course, which is going to be probably just as annoying as the markets, but at least I won't have to watch the price action. So from the front lines, have a great trading day, and I'll see you on Monday.